Welcome to Just Minding My Business Media, LLC, where you get information that you can use. I'm your host, Ida Crawford. Be sure to hit the subscribe button. So now we're ready to grab whatever you use to take notes and get ready for information that you can use. Wow, today I am so honored to bring to this episode Jason Kruger, who is the president and founder of Signature Analytics. Jason is shaking up the way business owners run their businesses by highlighting the gaps in data and reporting that many business owners face and sharing insights on how to improve profitability, increase productivity, and run your company smarter. Jason has over 20 years of experience in the accounting and business advisory field, working with mid market companies and nonprofits. Join us as we share actionable insights and strategies to help you run your business smarter. Wow. Welcome, Jason.
Thanks so much, Ida. I appreciate it.
Yes, yes. Wow. I don't know where to start because we have so many issues going on in businesses. And if you are solopreneur, you really got a lot of hats going on.
Yep.
So let's just jump in. Let's talk about nonprofits for a minute because a lot of nonprofits, as you know, they're all about getting donations and things like that. So how do you
Yeah.
support nonprofits?
Yeah. Nonprofits is interesting. It's an interesting time for nonprofits right now. And what we talk about internally is there's somewhat of a generosity, we call it a generosity crisis. And
Mm-hmm.
so during the COVID period, there was significant influx in funding coming into nonprofits from all areas. And so, you have um, nonprofits that doubled their budget intake from one year to the next, or even more than that, depending on where what their level of focus was.
Mm-hmm.
And so they started to build up their infrastructure to support that level of consistent donations um, and and grants and funding that they were receiving. What we've been seeing more recently over the last year or two is a decrease in funding to nonprofits as a whole. And so a lot of nonprofits are actually struggling with trying to find that that foundation and trying to find the baseline for what their funding levels will be. And so, where they've increased their expense structure in previous years, now they're not receiving the funding to support that expense structure, and so they're having to make difficult decisions on how they budget for next fiscal year, the decisions that they're making, and just setting the budgeting process is very challenging for them. And so we support obviously as you mentioned the accounting and financial arm of a lot of nonprofit organizations to really help them through some of these challenges, giving them visibility into their financial information and different programs so they can really understand how they're more wisely using their funding, and also so that they can go out to those funders with solid financial information to build that credibility to be able to do that. So there's a lot going on with nonprofits right now, and it's pretty exciting. It's challenging, um, but and we're seeing a lot of it.
Yeah, and a lot of times with most businesses, including nonprofits, when the budget looks funny, the first resource they look at is people,
Right.
because that is the biggest chunk of money going out.
Yep.
However, I mean, I've worked in nonprofit for over 15 years, and I've seen waste in not people, but in other areas,
Yep.
significant waste.
Yeah. Yeah. We see the same, and I think that you know salaries is and compensation is tends to be a very large expense line item, obviously, but there's other areas too, and but that's why the budgeting process is so important. When I look at, or when we look at the expenses associated with an organization or even a just a standard company, we want to make sure that every expense associated with that organization is aligned with the mission of that organization. Or is it fluff? Are they not getting value? Technology expenses, we find there's a lot of saving opportunities because technology can be expensive. You may have
Mhm.
Salesforce, you may have HubSpot. Those are expensive platforms. A lot of times companies are paying for seats or organizations are paying for seats with Salesforce that they don't need. They signed up for certain software platforms in the past that they're no longer using. And so there's a lot of opportunities there. But when we look and go through the budgeting process, it's really analyzing each level of expense beyond just salaries, as you mentioned, and understanding, is that expense driving the mission forward, or is that just being carried over from last year because that's how it's always been? And so taking a deeper dive into that can really impact the ability to just find opportunities to cut some of those costs.
Yes, yes, because that's the area I worked in, IT. And my goodness, it's like when things break, you know,
Yeah,
that can be expensive, however, it could be a lot of times I saw it could have been done a whole lot cheaper
yep,
had they pretty much listened to the team.
right.
So that's an important thing, is to listen to the team, to make sure that, okay, this broke. What is the most economical way to resolve this?
Right. Absolutely. And
That should always be the question.
exactly. Yeah, and unfortunately, sometimes it does go down to people and making sure that the team that you have is aligned with the mission. And
Hmm.
maybe somebody was brought in a few years ago, and the reason they were brought in is no longer aligned with the mission of the organization. And sometimes you do have to make some challenging cuts from a people perspective, but you want it to be the smart decision, not just, hey, we're just cutting people across the board without any true strategy behind that.
Hmm.
And that's where we come into play, is let's make sure that the organization, the company is making smart decisions and has the information that they need to be able to make those smart decisions to ultimately achieve the goals and missions that they have moving forward.
Okay. So how do you do that? What tools do you provide to get a really good, solid look at the company's finances?
Yeah, the first thing that we do is usually we support companies or organizations when there's usually some sort of a pain point happening. If everything feels good and is running smooth, most organizations or companies are not going to just say, "Hey, I'm going to switch up my accounting." Same thing with IT, I'm sure, right? It's,
Yeah.
"Hey, if everything's good, I'm not going to touch it," right? And so usually there's some sort of a pain point. The organization or the company has grown, and they've outgrown the team or the sophistication of the team that they have currently in place. They need to provide outside. Uh, they need to provide financial information to third parties or outside individuals
Hmm.
for investment purposes, for bank financing. They need to have audited financials.
Yeah.
Each state is different for nonprofits, but I know California off the top of my head, I think it's a $2 million. If you're $2 million nonprofit, you have to have audited financials. And so that's a significant compliance area there. General for-profit companies need audited financials or reviewed financials when they have bank financing and other requirements. So those are typically, we get called into action at those times. And the first thing that we do is really assess the current environment. So we're assessing the people, their current people within finance and accounting, their roles and responsibilities, what's working, what's not. We look at processes. Are the processes streamlined and effective and in position to support, hopefully the growth of the company as they move forward? We look at the technology and their technology stack, and is it being leveraged effectively and efficiently within accounting and finance? And then the last thing, which is most probably very important to business owners, is the reporting infrastructure. So is the business getting and management getting the right reporting to be able to drive decision making, understand the business, give visibility to make decisions? And so then we come back with a plan on how we fill in the gaps. So our model is fractional outsourced accounting and CFO advisory. So how do we fill in the gaps so that the company has that flexibility, that scalability, without having to hire a full-time person or full-time people? We leverage their existing team, we fill in the gaps, and we provide that leadership from an accounting and financial CFO perspective, so they have that that confidence as they move forward.
Okay, so if companies want to work with you, how do they do so?
Yeah, I mean, the easiest way is go to our website, signatureanalytics.com. I'm also available on LinkedIn. We have about 75 full-time employees, so we are a full-time employee model. We have processes that we've developed to ensure the highest quality of work. So we're not a staffing or recruiting firm where we're just finding consultants and throwing them out there.
Mhm.
It's all about making sure you have the right team for your organization or your company. And then you can email me as well at the letter J Kruger, that's Kruger at signatureanalytics.com.
Okay. Wow. So we talked about, the fluctuation in the nonprofit industry. So that leads me to the weatherproofing of your business for a
Mhm.
recession, because we already know everything is so volatile right now.
Right,
We
right.
don't know what's going to happen from minute to minute, day to day.
Yep, yep,
So let's talk about weatherproofing your business.
yep. Yeah, so I think it goes back to some of the conversation that we had earlier. I think that one is, do you have a budget or a forecast for this upcoming year? If not, it's critical to be able to map that out and understand the impact of your expense structure and as it relates to your revenue expectations coming in, and ultimately then your cash flows. So when we talk about a business or an organization, cash is king, right? It's how do we manage our cash flows, the ins and outs of our cash, which may be different than the ins and outs of our income statement that shows our net income or loss for the month. And so understanding not only your income statement or your P&L, but also the cash flow associated with that. Um, Understand your people and your team, and then we want to take a deeper dive into your expense structure. We talked about IT cost and software cost.
Mhm.
Another area that we found opportunity in recently is real estate costs, meaning rent, your lease costs for your office space. A lot of companies are taking a second look at that now with more of the remote infrastructure in place. If you're an organization where you used to have 30 or 40 or 50 or 100 people showing up to the office and now you have 3 or 4, and you have big office space and you have nobody there because of the new remote environment, maybe it's an opportunity to downsize or create more flexibility in those costs. We've seen significant savings there. What comes with that is a culture transition, which is obviously just as important, but it's very important as well. We talked about IT costs, really looking at each expense line item as we talked about, and is it aligned with the direction of the business, and is it supporting growth of the business or the ultimate goals of the business? Another area to look at is banking relationship. The worst time to go to a bank is when you've already run out of cash and you're showing losses and you're trying to get financing, right? So let's do that early. Let's build a relationship with the bank now. And I always, the large banks are great if you have a relationship with a specific banker and they understand your business. That's important. But the small community banks are also very, very valuable and can be a little bit more flexible in some cases if you have that pre-existing relationship, if they know your business and know the cycles of your business. So make sure that you have a relationship with a banking institution now, and maybe now is the time to start looking at um, you know getting approval for a line of credit. Maybe you don't even need to use all of it now, but or extending your line of credit in anticipation of some potential challenges down the road. The SBA has some great opportunities that people leverage. The state of California has something that's even a little bit more flexible than SBA. That is that runs through the local banks as well. That is an SBA equivalent, but it also allows for refinancing of previous federal SBA loan that you may have. So there's a lot of options out there from a financing perspective, but the key is to do it now and not wait later until you absolutely have to have it. The process does take some time, and the banks want to work with companies that they know, understand, and can build a relationship with. If the bank looks at you and you're looking at the bank as a transaction, they don't want to go there. They want that relationship.
Right, right. Business now is all about relationships, and I think it really always has been.
Yeah, exactly.
You know what
Yeah,
I mean? It's really
yeah,
nothing new. People want to work with people they know and they trust, and they,
exactly.
it's just that simple. Okay, let's talk a little bit about fraud. How do you see it and prevent it? Because that's really ramping up, as we
Yep.
well know. So, how do you help companies deal with that?
Yeah, a lot of times when, there's a couple different types of fraud, and what's most common in smaller, mid-sized businesses is where somebody, physically is stealing from the business. The other types of fraud are misrepresenting your financial information. When you go to get when you go to get a loan, or misrepresenting it to the auditors or to the audit firm. But the most common in small mid-sized companies is that situation where somebody physically is stealing from the company, and in that case, it comes down to levels of control, and how much control are you giving the individuals that have the ability to transact within the cash and the accounting of the company. And so what I like to tell business owners is, yes, you've started your business because you know your product, you know your service, but as a business owner, it's important to understand all aspects of your business.
Mhm.
Understand sales, understand marketing, understand the business development, understand HR, understand accounting and finance. You don't have to do the work. We want to hire the experts, but we still need to be involved. We still need to manage those individuals to ensure that they're successful and they're moving forward in the right direction. Providing oversight and managing, even if you don't have a financial background, educating yourself on that background, but providing some level of oversight of the individual or the team within accounting can limit that risk. That's the first thing. And
Mhm.
I see a lot of business owners that they say, "Oh, well, I'm just going to hire an accountant or a bookkeeper, and they're going to do everything, and I'm just going to run the business." And that creates significant risk for fraud.
Yeah.
That gives that person the ability, basically a blank check to do whatever they want in a lot of cases. And so, providing the oversight and understanding what that person's doing is one control. The other is really splitting up responsibilities and duties. So one person should not have the ability to enter bills and invoices and pay bills and sign the checks and do everything. That it's just too easy for them to create a dummy vendor account, cut a check to that business that they now own, and start siphoning and stealing money from the company. So there should always be a double approval set on any cash that's outgoing from the company.
Mhm.
So maybe you have your bookkeeper set up the payments. If it's paper checks, maybe they print the checks and then they provide the business owner or somebody else within the organization the approval to sign the checks and to approve the payments. We like to recommend actually that companies uh, do not go the paper route, and that they use a system maybe like a bill.com, or another system to be able to automate the payable process, and that eliminates any paper trail, not paper trail, but eliminates any paper and
Yeah.
the risk of somebody taking or stealing check stock or forging signatures, and it sets approval processes along the way, so that now the bookkeeper or the accountant only has access to enter the bills, set them up for processing, and then the person that approves it is a secondary individual, maybe the business owner, somebody else on the executive team. And so that eliminates the ability for that individual to have any access to physical funds from that perspective as well.
Yes, 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 because that is huge. I've seen it where I worked, people having too much control of purchasing, things
Yeah.
like that. And, you know, it was a mess. Trust me,
Yeah,
it was a
yeah.
true mess.
Yeah, and I mean, you got to separate those stat control. Got to have checks and balances. I mean,
Yeah,
that's the first thing that we do, and quite honestly, that's what we bring to the table is we give that confidence that we significantly limit the risk of any type of fraud that might be going on because of how we support and work with our clients and the process we put in place.
absolutely. Wow, you covered a lot, Jason. For sure. So, how businesses really being profitable? How do businesses really know that they're profitable? Because I mean,
Yeah,
it's a lot of paperwork and figures.
yeah. Yeah, the first is making sure you have confidence that your accounting is accurate. Or when you get your financial information, do you have confidence that it's accurate? And I would say most small and mid-sized businesses don't have that full level of confidence. And if you don't, I mean, that's obviously what we do, right? We make sure we give the businesses confidence that their financial information is accurate. So once, let's assume that you have accurate financial information, then how do we dig into that financial information?
Mhm.
Depending on your business, we really want to understand the margins of your business. So if you're selling a product, how much are you selling the product for, and how much does it cost you to make that product? What is the true margin? And we talked to a lot of business owners, and we asked them, what are your margins? And they say, well, it's somewhere between 45 and 50%. And I say, okay, well, is it 45%? Is it 46%? Is it 48%? Or is it 50%? Because a 5% swing is a significant swing. Look, if you're a $10 million business, 5% is $500,000. And 1% is $100,000. So if we can understand that margin of your business, not only as a whole, but by product line, by service line, then we can look we can work with you to make decisions to improve that margin by a percentage or 2 percentage points. And what happens is that 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 gain, that 100,000, that $200,000 for a 2% increase in margin, that falls right to the bottom line. That helps, that really helps you become much more profitable. It gives you much more cash flexibility to reinvest back into the business. As a business owner, maybe you want to, gives you opportunity to bonus some of that out to yourself. And it also increases the overall valuation of your business from an outside third party as well. So really understanding the margins of your business at the detailed level is the first step. We talked about overall expense management and understanding the expense structure and making sure that it's really adding value and driving value to your organization as well as another part of that. And then obviously always managing cash flows moving forward, because cash flows can certainly be a lot different than what your income statement looks like. So being able to manage those things and really get granular into the financials is critical. And defining what we call key performance indicators so that you can measure your business consistently as you move forward.
Yes. Wow. So, Jason, again, how do companies reach out to you and get your services?
Yeah, it's Signature Analytics, and our website is signatureanalytics.com. You can see me again on LinkedIn. Just type in my name, Jason Kruger, or type in Signature Analytics. We're right there. And then anyone can email me at any time, the letter J, Kruger, that's Kruger, at signatureanalytics.com. And we love talking to business owners. We love talking to organizations. If we can help you, that's great. If we can't, we're more than happy to. I'm sure we can introduce you to somebody that can.
Yes, yes, that's awesome, Jason. Well, I really appreciate you taking time out of your day. You covered a lot of road in this conversation and definitely left something for our listeners and viewers to think about in their business and start to really pay attention to. So, thank you again for all your expertise and looking forward to more collaborations with you.
Thanks so much, Ida. I really appreciate it.
Absolutely. And thank you, audience, for tuning in. You know we love you.